Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala nabiy al-Amin wa ala alihi wa sahbihi ajma'in. Wattabi'ina lahum bi ihsani ila yawmiddin amma ba'd. Honorable brothers and sisters, distinguished guests, ladies and gentlemen, this is our honor to welcome you all to today's lecture entitled Asymmetries of Cryptocurrencies, Intraday Return and Implied Volatility. And the lecture will be conducted by Associate Professor Dr. Mohd Eskandar Shah, inshallah. Untitled Chapter, Islamic Economics Association of the Faculty of Sharia and Islamic Studies, Kuwait University, is very much happy to receive participants and guests from all over the world in its activities and programs, both in English and Arabic languages. Untitled Chapter is trying to spread the knowledge and wisdom, practices, and practical theories, policies, which are should
Hello. Hello, Assalamualaikum.
Hello, Assalamu alaikum wa rahmatullah. Doctor, sorry, I think there is an interruption in the internet. So I actually started the session, but suddenly disconnected. So never mind. I think you can hear me now, Doctor?
I can hear you, but I cannot start my video.
Yeah, even me. I think there is a problem in the system. I think our committee will try to solve the problem now. Yeah, I think it's now okay. I think you can see me and you can also switch on video. Okay, thank you. So, ladies and gentlemen, brothers and sisters, sorry for the inconvenient cause. It happens sometimes in the virtual programs. So, as I said, that Untitled Chapter Islami is trying to promote Sharia-compliant modules, strategies, policies, and also some practical theories through conducting lectures, talks, workshops, seminars, especially fields of Islamic banking and finance. And we also try to arrange and organize some workshops of skill development aspects, as you know, in Arabic language. So today we are very much happy to conduct this lecture with Professor Dr. Eskandar Shah. And as You know, Associate Professor Dr. Eskandar Shah is currently Associate Professor at the Hamad bin Khalifa University in Qatar Foundation, Qatar. And he was also Associate Dean of School of Graduate and Professional Studies at the International Center for Education in Islamic Finance, INSIF, in Malaysia. And prior to joining INSIF, Dr. Iskandar was an assistant professor at the Department of Finance in International Islamic University in Malaysia. During his doctoral studies, he worked as a tutor at the University of Nottingham and lecturer at Nottingham Trent International College, United Kingdom. And he was the Dean of his School of Graduate Studies, Deputy Director of BNP Paribas Center of Islamic Asset and Wealth Management, and Treasurer of Malaysian Finance Association. Dr. Iskandar holds a PhD in Finance from University of Nottingham, United Kingdom. He also holds a Master's in International Economics and Finance from the University of Queensland, Australia. His bachelor's degree in Business Administration was obtained from the International Islamic University in Malaysia. And Dr. Iskandar is a financial sector specialist consultant for World Bank and advisor for Brunei Institute of Leadership and Islamic Finance, Brunei. He is also an associate editor for Turkish Journal of Islamic Economics, International Journal of Islamic and Middle Eastern Finance, Asian Academy of Management Journal of Accounting. This is an honor to welcome Dr. Mohd Eskandar Shah Muhammad Rashid to conduct today's lecture. And in fact, this is a topic of his paper, his research paper, written by Dr. Iskandar, also published, entitled Asymmetries of Cryptocurrencies, Intraday Return and Implied Volatility. So he will discuss the paper today, inshallah. So I welcome Dr. Iskandar. Please welcome.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. A very good afternoon to everyone. Good morning and probably good evening as well. Depends on where you are. I guess this is my third time doing this webinar for this year, if I'm not mistaken. And this probably will be definitely the last one for this year. Okay, because New Year is coming, inshallah. But in the past, I've been presenting something which is related to Islamic finance, on issues related to sustainability and inclusion, and what is the way forward for Islamic finance. But when Dr. Mohideen asked me this time around, I said, I'm working on several projects, but one of the things that I've completed recently is this paper. And many of you might wonder what is the connection between this paper and Islamic finance. Although we have positioned this paper as a general finance paper, but in today's discussion, inshallah, I try to bring some connections and implication to Islamic finance too. So that's what I'm planning to do. Most likely I'm going to present probably for 25 to 30 minutes. And then the remaining we can have perhaps question and answers, because I'm sure every time we talk about cryptocurrency, a lot of discussion comes in, and especially about the Sharia understanding of cryptocurrency, and also what is the implication to Islamic finance in totality. So Doctor, if you can share my slides, I would appreciate it.
Yes. Okay.
I guess not many people turn up this time around, and it's understandable because it's the end of the year. Everybody's enjoying their year-end holiday. But inshallah, whoever is around, we will try to get the benefit from this presentation. Me too. So this paper is written with my former PhD student, Muhammad Mahmudul Karim, and currently is an assistant professor in Malaysia, University of Southampton, and also his colleague, Dr. Abu Hanifa, also a professor at University of Southampton, Malaysia. So next one, please. Okay. So perhaps you all want to understand why we wanted to do this research. I think that's the most important thing, right? The motivation. And for those who are writing papers, we have to spend a lot of time of asking ourselves, what is the need of writing these papers? Many reasons. Obviously, we really want to understand how the dynamics of cryptocurrency. So when we talk about dynamic, we are talking about the relationship between the volatility and also return, which is the fundamental questions in finance. In the normal stocks, right, you have the return, which is how much you gain from the stocks, and also you have the volatility of the stocks. So when you talk about volatility of the stocks, we are just talking about the movement of the prices, how volatile it is. In the normal connotations or normal understanding of the typical financial assets, generally, when you have positive returns, you have some impact on volatility as well. But generally, the volatility is not too much. And in some cases, it can also reduce volatility. Because good news, people say things are good, and people may not react to good news, and sometimes positive return can also lead to increase in volatility or positive volatility as well, right? And then on the other hand, when you have negative returns, you probably see greater volatility in the stock markets. So now the question is that whether the same logic applies in the context of cryptocurrency or not. Because what is the difference between the normal stocks and cryptocurrencies? Right? Normal stocks are driven by fundamental values and also by news, rumors around the particular company. Right? And we know what a stock represents. A stock represents a valuation of that particular company. All right. So any news that affect valuation will have an impact to the prices. So we know what drive the prices. But when it comes to cryptocurrency, right, generally, right, it's an alternative form of investments. Okay, some people say it's a currency, but it cannot be used as a legal tender. So that means it's an asset class, But the problem with crypto is that unfortunately we do not know, what drive the value of crypto. So right now the value of it driven because people are excited about it. The technology behind it is amazing. No one controls it, so that is independent from any nations. It's not like a currency which is issued by a certain central bank. All right, and more importantly, you have a strong followers of crypto. Okay, and people are quite excited about it. So what exactly that we want to know here is that we want to see whether the fundamental relationship between the return and volatility, is it the same for crypto and stock market? Because the normal understanding of the stock market is that, the effect is obviously asymmetry. So when you talk about asymmetry, means that the positive return and the negative return will not have the same level of impact on the volatility. Okay, so that's what we mean talk about asymmetry. So in the context of crypto as well, we also expecting asymmetry, but is it the behavior similar when it comes to stock market? So that's what we are exactly trying to do. So what is the novelty of this paper? The novelty of this paper is that, number one, we use 6.5 million observations. Right? So there's a lot of observation, okay? And this data was available in some of those we purchased as well. So we use 6.5 million observation. And number two, we also divide the data into low frequency, which is 1 day, to high frequency, which is 1 minute, okay? And the reason why we want to do this, because crypto is generally driven by what we call as speculative behavior. And that attract attention into what we call as high frequency trading, okay? Because people are trading continuously, because there is no really fundamental values are driving those. So majority of the tradings are driven by emotions, by behavior, and also by future expectations. Okay, and this is what is exciting. And when the data is available to us, so we decided to do this. Next one, please. Okay, all right. So let me spend a bit of time to really make you understand what exactly crypto is all about. And in fact, you probably have understood, but just to rehash, just to make sure that everybody on the same page. So let's pause for a while and trying to understand when we talk about crypto, what exactly that we're dealing here. All right. So we're dealing in a concept which is driven by an amazing technology. Okay. No one has the power to control the technology because the technology is created, right? And it's not under the purview of any country, all right? But you can use the technology to issue what we call as a cryptocurrency, all right? And the most famous one is Bitcoin and also Ethereum. And there's so many other hundreds of cryptocurrencies, all right? Because once you master the technology, you can actually create the crypto. Okay, so there is a complex algorithm that you need to use in order for you to solve algorithm to solve a certain algorithm problem, and then that require huge amount of energy. And once you able to do that, and your currency is being issued, then a new crypto is actually being created. Okay, so it's not easy to create crypto because it requires a complex solution to an algorithm, and that requires huge amount of energy. Okay, so the most popular one is Bitcoin, and then you also have Ethereum, and also you have other things. But in this paper, we only focus on Bitcoin and Ethereum for two reasons. Number one, these are the two largely traded Bitcoin. Number one, cryptocurrency. We always confuse between Bitcoin and crypto. We use interchangeably because Bitcoin is the most popular cryptocurrency, right? The second one is that the future of options on these two cryptos are actually available. So when the options are available, we can actually compute what we call as implied volatility. For those who have studied finance, you probably know that majority of the people, they use standard deviation for volatility measurement. And if you remember your finance class or your futures class, you probably come across that the limitation of using standard deviation of a measurement of volatility. So in this context, we use a better measurement, implied volatility, and that can be only measured because of the availability of the option market for these two cryptocurrencies. Okay. And the others I already explained. They got a lot of attractions in the past. Of course, right now crypto is under a bit of pressure. A lot of things which is related to crypto, it seems to give a very negative news, especially the collapse of FTX and so on and so forth. And some of the crypto has lost its entire value, and people have lost a lot of money as well. But I'm not here to discuss the advantages and the disadvantages. It's suffice to say that there are interesting value about crypto, which I'm going to discuss when it comes to the context of Islamic finance. But for now, let me just go through the technical understanding of this paper, and then the next part of my lecture, I'll talk about the implication to Islamic finance. Next one, please. Okay. So as I said, I already explained to you the conventional understanding. So generally, people look at standard theories in terms of understanding the return volatility relationship. Generally, negative news will have more increase the volatility more than the positive news. And why is that the case? Because one is the leverage effect, because you are highly leveraged. So the downfall of your stock market will amplify the losses. And when people look at losses, people become scared. This is what the famous prospect theory in behavioral finance is all about. Loss aversion, and people will start to exit the market and try to do more transaction, which will increase the volatility as compared to the positive news, because positive news are generally driven by fundamental values as compared to the behavior perspective. All right, and also we have feedback hypothesis. So we are trying to see whether the same logic can be applied in the context of crypto or not. Next one, please. Okay, and I already explained to you one of the most significant contribution of our paper is that we didn't use a standard Black-Scholes volatility, but we use a model-free implied volatility, which is available due to the available of the option market for these two cryptocurrency. And then another unique contribution is that we use 6.5 million observations at different frequencies. That means we have 1 minute data, we have 5 minutes data, we have 10 minutes data, we have 15 minutes data, and also we have daily data as well. So that's another robust contribution of our paper. Next one, please. Okay, so I can just quickly skip this part. This is technical. This is how we just compute the return and the volatility and so on and so forth. So since this is a webinar and not a finance class, so I just skip this part and then straight away go to the findings, please. All right. Okay, so this is exactly that what we found. Okay, first of all, I mean, I didn't share with you all the tables. First of all, we found that both negative return and also positive return have a positive impact on volatility. That means volatility increase for both. All right. So interestingly, in our paper, positive news have a greater impact on volatility as compared to the negative returns. Right. So that means negative news have lesser impact on volatility as compared to the positive return. So what does it mean? It means that in the context of crypto, unlike the normal stocks, when things are going up, more and more people actually start trading. Okay, so that's one of the interesting findings when it comes to this paper. So in other words, you cannot look at crypto as a typical assets like the stock markets, right? So you have to really look at the behavior of crypto is completely different as compared to the stock market. You know why? Because people look at crypto as a more of a speculative investment. They get into the market without even knowing what is exactly driving the value of crypto. Okay, and this is the fundamental discussion in Islamic finance. You know, although crypto fulfill all the asset requirement in Islamic finance, it's an asset, you know, there's a value and so on and so forth. But unfortunately, until today, we cannot figure out what is exactly driving those values. And in fact, in this case, when there is a positive return, you know, volatility goes up. That means that, you know, people just want to get into the market because people think that the increment in the crypto, it seems to be like, you know, positive news means that, you know, the stock markets are going up, and then the crypto market is going up, and then it will keep actually going up for some period of time, right? So this is the common understanding of it. And then the next part is that the second finding that we have got is that using low frequency data, which means daily data, asymmetry is more visible at medium to uppermost quantile of the volatility distribution. So what we done is that we actually split our data into 10 regimes, all right? So regimes of low volatility and also high volatility, okay? All right, right. So the asymmetry is actually more visible at medium and upper quantile most of the volatility distribution. Okay. Whereas using high frequency data in 1 minute data, asymmetry is more visible at lower quantile of the volatility distribution. So what does it mean here is that, you know, the impact is not only depends on whether it's positive or negative, the impact is also depends pretty much on whether you are in the high volatility regime, also low volatility regime. So in this case, 1 minute data, all right, is showing a different behavior as compared to the daily data. So what does it mean? It means that, you know, in the context of crypto, people are really more focused as what is the behavior and the dynamics of crypto. Okay, so that's what exactly it means. That's why the 1 minute data distributions is different behavior as compared to the daily data. So that's why we, even though we did all the one in the middle, 5 minutes, 10 minutes, 15 minutes, so on and so forth. But for the presentation of this article, we just focus on the extreme, which is 1 minute and also the daily. Okay. The third result indicate that the response to negative returns is monotonically decreasing function of the return horizon. However, the result indicate that the positive return is increasing function of the return horizon. So what does it mean is that it means that when people see positive news, people get excited and more excited. Okay. But when people get negative news, yes, they are excited, they start trading, but over the time, monotonically, it start declining. Okay. This is like very interesting, right? For example, in the normal stock market, both positive and negative news will monotonically decrease, right? Okay, you got the news, right? And suddenly, okay, fine, we got the news, and then, okay, we really know what's the news, and then decrease. Even the negative, okay, we know the news. In some cases, it will go up, you know, if the news keep compounding, we come back, but normally it will start decreasing. But in the context of crypto, what exactly that we found is that it's very interesting. Then in the context of positive, people get excited and excited and excited. But in the context of negative, okay, it got negative, and then eventually it will decline just like a stock market. So what this shows that, you know, majority of the people who are trading in crypto doesn't really know what they are doing in the context of what news is driving the movement of the crypto. So this is what we say, that at this point of time, crypto is generally driven by what we call as speculative investors. Okay. All right, I'm almost done. Don't worry. I don't want to bore you with all these technical things, but I just want to give you the understanding of the crypto market, so that when you get into crypto market, you know, you understand what exactly that you are doing. Okay. Fourth, the absolute value of the estimate coefficient keep increasing as we move from the highest frequency to the lowest frequency of the data. Okay, so highest frequency is mean what? 1 minute. Lowest frequency is basically 1 day. All right. And also increasing as we move from the lowest quantile, all right, to the highest quantile of the volatility distribution. So what does it mean here is that the relationship depends on two things. Number one, whether you are high frequency or low frequency. Is also depends on whether you are low volatility regime or high volatility regime. So these are the two things that we actually found out. Okay, and this is exciting findings. Okay, next one, please. All right. Okay. So when it comes to similarity, okay, what exactly that we found with exactly other studies, the major similarity in estimate result of intraday and daily data interval is that during the medium to high volatility regime, both positive and negative reason are positively associated with the changes in volatility. So that means is that in most cases, what is the similar is that yes, both positive news and negative news will increase, will trigger some kind of volatility. Okay, so this is something similar. So this is something that commonly we know. So the previous slide was the differences, and we also found that using the daily data, a positive recent shock tends to create a greater response to cryptocurrency volatility compared to the volatility response to the negative return shock. I already explained to you what does it mean in terms of positive and also negative return. Okay, all right. So this is what studies which is similar to the previous literature and consistent to some of the findings that we see in the literature. But I already explained to you this. Next one, please. All right. Okay. So this is just to summarize. We look at 1 minute, all right, and also we look at the daily interval. Okay. So how to exactly to read this? Okay. So it's quite easy to read this. If I can show you, this is the y-axis and this is actually the x-axis. So the x-axis is looking at regime, okay, low volatility regime to the high volatility regime, okay. One line is actually looking at the negative return, and the other line is actually looking at the positive return. But in order for you to read this line, you need to look at the middle line. Okay, to read those figures, the easiest way for you is to look at the middle line. Okay, so what the middle line says, that the middle line is the difference between the positive and also negative. Okay, so if the middle line is actually a flat line, all right, that means it's a straight line, that means there is not much of differences between positive and negative. Because bear in mind, what we found out is that both are increasing the volatility, okay, but in some cases positive are more than the negative, and that's what we found. But in the context of, you know, middle volatility regime, you can see the line is much more flatter. So when you talk about much more flatter and it's close to zero, what does it mean is that there's not so much of the differences in the volatility in this region, right? But when you talk about low volatility, 0.1, and high volatility, this is for 1 minute data, you can see that there is some kind of differences, right? It's either it goes down or this one, you know, slightly more. So it means that the differences is much more in the context of low volatility regime and also high volatility regime. And this is actually for 1 minute interval. But for daily interval, if you can go down, and you can probably see there's much more differences in the context of what? High frequency or high volatility regime. So this is some of the contribution that we found. It may sound technical, but we just want to prove our argument is that, you know, in a nutshell, our argument is just says that, you know, in context of crypto, even with, because normally in the context of the normal stock market, 1 day is considered high frequency, right? But in the context of crypto, we're talking about 1 minute, we're talking about 5 minutes, and 1 day is really considered very long or low frequency. Why? Because in the context of crypto, even within 1 day, you can see a lot more things are happening, because people are just like not fanatic, but people are just obsessed with the dynamics movement of cryptocurrency. Whether it's a good or bad thing, so let me just talk about this data. Next one, please. Okay. All right. So this is just the same argument, trying to make the point that, you know, if you look at this diagram, trying to make a point that, you know, that this is quanta regression. So quanta regression, I think you know, a regression that run the relationship between the volatility return, the impact on volatility, all right, in the context of different regimes. So you have low volatility, which is 0.1. So and then you have high volatility is actually 0.9. So in other words, the relationship depends on which regime that actually you are looking at, all right? And the relationship is much more powerful in the context of low volatility regime as compared to the high volatility regime, and vice versa, depends on which time period and that you're looking at. Okay, next one, please. Okay. All right, so the conclusion is that the hypothesis of the asymmetry relationship hold true even using high frequency data. Nonetheless, the asymmetry relationship is not homogeneous, contrary to the earlier research. So this is our contribution. All right, so the relationship pattern is low volatility regime differs in the context compared to the high volatility regime, and high volatility is more likely driven by uninformed investors during the high trading frequency period. Okay, so this is our contribution. So let me sum up. So this paper is trying to explain to you that and prove to you that, you know, crypto is not like a normal financial assets. Okay, and the behavior of the investors seems to be more different as compared to the normal stock markets when it comes to crypto. Why? Because the nature of the people who invest in crypto are more excited in cryptocurrency due to the nature of the cryptocurrency that give you more opportunity to make money even in the short period of time, to the extent of 1 minute. Okay, all right, so this is our findings. So now, before I end my presentation, let me tell you what is my view or the implication of this to Islamic finance, because this is an Islamic finance session. Number one, right? The technology of crypto is actually amazing. Okay. Why is that the case? Because the technology of crypto is built based on blockchains, right? So it cannot be corrupted, it cannot be manipulated. So it can create what we call as the transparency, and the process of crypto creations seems to be more driven by technology and cannot be manipulated based because of a certain algorithm and rule that been put in place. okay, and process of creating new currency or new Bitcoin within crypto is also difficult because of the complex algorithm and the usage of huge amount of energy, which is also the downside in order for you to that. So in other words, the amount of crypto or the amount of currency in the market can actually be controlled. Okay, right? That's the good side of it. Okay, and the emergence of crypto give an opportunity for people who are upset with so many financial crises, which is driven by what we call as a lack of monetary disciplines. Because when people start printing money, the money lose its value and it's actually contribute to high inflations, right? So countries, especially central banks, who doesn't have a discipline, all right, who does not have a discipline in terms of managing their monetary procedures, will eventually end up with printing so much of money, which contribute to inflation in many countries, including Muslim countries as well. So, for example, Lebanon, the currency is collapsed, and so on and so forth. Okay. So that is basically as far the currency is concerned. But what is the downside and what is the contentious debate that we are talking about here? So people are still debating whether crypto can play a better role as a currency or basically better role as an investment asset. Right? So when you talk about investment asset, we always know in basic finance is that when you talk about investment is an asset that have ability to create value in the future. Okay. So now the question is that what exactly crypto can create in the future? So why you invest in crypto in the first place? In what logic that you use in crypto in the first place, right? So generally people say, okay, you know, I'm tired of putting my money in dollar. I'm tired putting my money in gold. So now I want to put money in something else. So it's become a viable alternative asset. But unfortunately, until today, no one can actually have discovered, or no one even have explained to me a question which I'm still trying to ask myself, is that what exactly drive the value of crypto other than what we call as belief, that the fact that this has values. Okay, the same thing that you can say, okay, people say, you know, you can say the same thing about US dollar, right? What drive US dollar? So you can say US dollar is driven by the fact that, you know, there's an entity called Federal Reserve. They issue this currency, and this currency depends on the fundamental economy of America. And if American economy is start going down, that means the value of the currency will going down as well. But the question is that, can you say the same thing about crypto? Yes or no? That's the question that we have to ask. Okay. Number two, the advantages of crypto is that, okay, but before I explain number two, let me just explain to you a little bit about, you know, the aspiration of Islamic finance. So people always say, you know, we trying to practice the true Islamic finance, right? So the true Islamic finance for me have 4 different stages. The first stage is we should only involve in good activities. Okay, we should not invest in haram activities. Okay, so that one is easy. So today, even though in Malaysia, for example, you do 100% tawarruk, but as long those tawarruk is financing all the good activities, so it doesn't finance haram activities and so on and so forth. So that itself will basically solve many problems in this world. Can you imagine in this world, you don't have gambling, you don't have drinking, alcohol problem, you don't have LGBT problem, you don't have what else? Pornography problem, you don't have tobacco problem, you don't have all the negative things. Okay, the world will get better. So that's the easiest thing that Islamic finance can do. The second stage, I always say, okay, we need to reduce leverage. Okay, so that means the current banking model, which is driven mainly by leverage deposit, has to change from deposit account and slowly move to the investment account. So in that way, you can actually reduce what we call as the leverage within the system. Okay, and the same thing, you can also reduce the leverage in the corporate sector as well by going for more equity and also hybrid instrument as compared to going to the pure debt instrument. So the first one we are doing, the second one we're also doing gradually as well. The third one, Islamic finance should be removing or slowly going away from what we call as a speculative investment. So this is where we have a problem, because crypto seems to be seen as a speculative investment. Okay, at this point of time. Okay, and these things have to change for crypto to get, acceptance and to become more a viable asset within the space of Islamic finance. Make no mistake, I'm not against crypto. I'm just against the fact that how it's been perceived and how it's been used at this point of time. And our paper prove the fact that, crypto is mainly being perceived as a speculative asset as compared to the real long-term assets, like other financial assets. So this is the third one. The fourth one, which is where the relevancy of crypto comes in, is that in order for us to practice a true Islamic finance, we need to remove ourselves from fractional reserve banking, okay, or fractional reserve system. So in where private banking can continuously create money through what we call as the this kind of reserve requirement ratio. I think if you study finance or if you study banking, you probably know that 90% money which is being created in the system are through private credit creation, not the printing of the actual money. Okay, so that's why the banking sector, which is mainly dominated by the conventional side, is very powerful because they have so much money and liquidity, and they can decide which industry to finance, which country to give loan to, which, and so on and so forth, because banking itself in nature is have the power of credit creation. If you don't believe me, you can read any books, even written by the Western scholars, Mervyn King, Lord Adair Tanner, Jeffrey Sachs, Joseph Stiglitz and Paul Krugman. Forget about Islamic scholars, even the Western scholars mainly agree the fact that there's just too much money in the system that we continuously created because of this ribawi nature, interest nature, and the fractional reserve nature. Okay. So why am I supportive of this idea of crypto? All right. Not because I want people to move into speculative investment, but it gives us an alternative, something to think about, how exactly that we can actually move away from the current system that we have, which is ribawi in nature. Okay, this is my view. Okay, because a constant creation of money give a power to a certain group of people, but enslave majority of the people if the money is actually not being used in the right way. Okay, so money creation is okay, you can say it's a good thing because we can invest and so on and so forth, but you need to use that money to invest in the right thing. For example, you build roads, you build school, you build hospitals, you build infrastructure, you build business opportunity, you finance valuable companies, so on and so forth. But if you take a country like America, apparently 90% new money are being used for what? It's being used for speculative investment, stock market, property market, and all these quick return that taking place. Let me just give you one simple example before I finish my lecture in 1 minute. During COVID time, the entire economy is going down, but the stock market is going up. Can you believe that? Entire economy is going down, but the stock market is going up. Why? Because during COVID time, there's so much new money that being created through quantitative easing. And where does this money go? This money actually end up to where? In stock market, and especially in America, it went up to property market. And why so? Because America has the power, because their currency is considered as a world currency. So even they print so much of dollar, the value of dollar seems to be protected, unlike Argentina or Lebanon, if they print so much of their currency will become what? Valueless. So the world monetary system is not a fair system, and that prevents us from implementing Islamic finance in the first place. So this is actually my 4 stage of journey towards transition to Islamic finance. So we are doing okay in number 1, financing real asset, halal asset. Okay, not so bad, but okay. The second one, reducing leverage. We are still very reluctant to move to investment account because the bank is being seen as a risk transfer. So we need to have more capital market and also in place so that we can further goes to more investment account as compared to the typical deposit. So that is another thing that we need to do. Speculative investment, what we must avoid. For example, if you're just putting money in crypto because you think the price is going to go up and so on and so forth, you know, yes, in some countries they say halal. In Malaysia, crypto is halal. Yes, I believe the nature of it. Yes, you cannot deny the fact that it's another asset, but how it's behaved right now may not really serve the purpose of true investment. But for me, the most important invention of crypto is whether we can use this knowledge or context to really come out with a new monetary arrangement so that we can be away from fractional reserve system. So that is the contribution of our paper to this discussion. We didn't highlight all these things in the paper because we want to position the paper for general readers at this point of time. But this is something that we will continue researching in the future, how we can actually use the concept of crypto in terms of strengthening Islamic finance. So with that, thank you so much, Dr. Mohideen. Let me stop there and maybe we can spend the last 15 minutes for question and answers. Thank you so much.
Thank you very much, Doctor. I think now we open the floor for any question or comment from our guest. Please, if you have any question or any comment, you may write in the question box or you may raise your hand. So we'll switch on microphone for you, inshallah. Anybody has any question or comment? Doctor, is your paper online? I mean, anybody can download it and read?
We are yet to send it for publication. So we're going to send it to a special issue in January. The paper just completed. But let me ask the co-author whether we can share the working paper or not. Yeah. So in the paper, you can see all the graph, all the tables, and so I just summarized the general findings for you. Yeah.
In fact, we also publish in our official website of Untitled Chapter Islami. Usually we publish research papers and articles in the website. Inshallah. So right. Any question? I think there is no question or comment yet from the guest.
Was it too complicated, my paper? I'm sorry. All right.
No, sometimes it's okay to have some lecture with the contemporary issues, though it's difficult to understand maybe for some people. I think there is someone raised hand, Brother Abdul Hamid. Yeah, okay. Welcome, Brother Abdul Hamid.
Yes, assalamu alaikum wa rahmatullahi wa barakatuh. Thank you so much for a very good lecture. My question is a little bit more technical. You discussed having done 6 million plus observations, as well as not using a Black-Scholes equation. How did you, if necessary, or did you find it necessary to use any type of option pricing formulas? And if so, what formulas did you use to value the options of the cryptocurrencies? If this is part of your research, we didn't have enough time to look at your formula, so this is why I'm asking.
All right. I think that's a very good question. We use 2 crypto, and because the availability of the options for these 2 crypto, okay, let me just go back one step and then explain to you. In majority of the volatility calculations, they only use options price at the money. Okay, at the money, that means, okay. But in our context, we use all the option pricing. Either the option is out of the money, at the money, and in the money. Okay, so this is my co-author areas now. But I try to explain to you the logic of it. So, and we didn't compute the implied volatility because of the availability of this so-called formula, modified implied volatility. We just took it, the available data for our research. You see the point I'm trying to make? All right. So the technique that being used itself is superior as compared to Black-Scholes because we use all the moneyness data in terms of computing the volatility. So that is another contribution of this paper.
No, I appreciate it. It's just generally within Islamic finance, because we don't have hedging in the Western sense, or it's very hard to sometimes use general market indicators to understand the market and relate it to an Islamic finance. So just to recap what I understand, you not only took measurements of option pricing at the money, but you also looked out of the money. You looked in the inclusive moneyness of the options in order to get a better understanding of the market.
Yeah, and okay. better measurement of the implied volatility.
Better measurement, excuse me, not the market itself, but the
better measurement of implied volatility compared to the previous paper who only used the option moneyness, which is at the money.
Okay, and then just a quick follow-up point. Did you find that looking at options of cryptocurrencies more effective as a measure of a volatility as opposed to futures on cryptocurrencies or on Bitcoin particularly? Because within the United States there is the option for it as well as the future, and I just wanted to know if you felt one was a better indicator of for understanding implied volatility or not. And I'm sorry to go so technical, but
not really, because we just go by the standard literatures that implied volatility generally derive from Black-Scholes, which is using option moneyness. But then we just extend a bit more that we use modified, so that which include all the moneyness. That is basically the extension of the contribution. But we didn't really look at the volatility of the futures as the measurement of the implied volatility.
Okay. Well, thank you very much. Again, very technical and a little bit odd.
No, that's fine. That's fine. Although this part is done by my co-author, but but the logic of it, is still the same.
All right. Well, thank you very much. Jazakallahu khairan.
Okay, thank you very much, Brother Abdul Hamid, and Jazakallah khair, Ustaz Dr. Iskandar. So, any more question from the guest? Otherwise, we need to conclude the session. Any more question or comment on the paper? So, on behalf of the Nadal Iqtisad al-Islami, we would like to thank all the guests who joined today's lecture. And also we thank our management board, especially Dr. Ala Al-Ubaid, Director General of the Association. And special thanks to Associate Professor Dr. Mohd Eskandar Shah for your presentation of the paper and discussion on that. So, Jazakallah khairan. And if you have any few words, closing words with Dr. Iskandar Shah.
No, I'm just, 2022 was a very exciting year. A lot of things has happened. So now we are moving to 2023. One of the significant events that happened in 2022 is probably the collapse of, FTX. That has a strong implication on crypto. So my hope is that, the technology of crypto can be used to harness much more good things rather than what we are doing right now. So don't discount the power of crypto, but use the power for promoting and harnessing the true spirit of Islamic finance. So that should be our thinking, rather than just using crypto to make money, like what most people are really doing right now, which is not really a good thing. Okay, thank you.
Barakallahu fiqh, Jazakumullah khairan. Then we conclude our session here. Subhanakallahumma wa bihamdik, ashhadu an la ilaha illa ant, astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam. Thank you so much. Assalamu alaikum.
سعيا لخدمة طلبة العلم والارتقاء بمستوياتهم، يسر نادي الاقتصاد الإسلامي الإعلان عن منصة مدارج لإصدار الشهادات، بوابة خاصة لكل طالب. إمكانية التحقق من مصداقية الشهادات، إمكانية تغيير الاسم. كيف تعمل المنصة؟ بعد حضورك إحدى المحاضرات التابعة لنادي الاقتصاد الإسلامي، يقوم النادي بإنشاء حساب شخصي لك، ثم تصلك رسالة إلكترونية عبر البريد تحتوي على رابط المنصة. اسم المستخدم، كلمة المرور. قم بالضغط على رابط المنصة، ثم أدخل اسم المستخدم كما هو موضح في الرسالة، وأيضا كلمة المرور. ثالثا، اضغط على شهاداتي. بعد الدخول إلى لوحة التحكم الخاصة بك، قم بالضغط على شهاداتي. هنا سوف تظهر لك جميع الشهادات الخاصة بك. بإمكانك الضغط على تحميل لتحميل الشهادة. كما يمكنك تعديل الاسم بالضغط على تعديل الاسم الكامل وكتابة الاسم الصحيح. انتبه، يسمح لك بتعديل الاسم الكامل مرة واحدة فقط. الرجاء التأكد من كتابة الاسم الصحيح. بعد ذلك قم بالضغط على حفظ. كما يمكنك تعديل كلمة المرور وإدخال كلمة مرور قوية. تم تسجيلك في منصة الشهادات بنجاح. مرحبا وأهلا بك في منصة مدارج الخاصة بشهاداتك في نادي الاقتصاد الإسلامي. شارك الآن وارتق معنا بسلم عضويات النادي. نادي الاقتصاد الإسلامي، التأصيل والتميز.